Good morning, investors, and welcome to your market briefing for August 17th, 2025. It's a risk-off sentiment dominating the markets today as we're seeing a notable pullback across the board. The S&P 500, Dow Jones, and Nasdaq are all in the red, suggesting investors are taking profits after the recent run-up. Adding to the cautious tone, the VIX, Wall Street's fear gauge, has spiked, signaling a rise in market uncertainty and anticipated volatility. In this environment, high-growth stocks are feeling the heat, and today we're zooming in on Tesla. The EV giant is not only navigating the broader market downturn, but is also facing its own set of technical pressures and concerning headlines. Stay with us as we break down the charts and the news you need to know. Looking at the S&P 500, the index is experiencing a clear pause in its recent uptrend. Today's red candle shows a rejection from the upper resistance levels as profit-taking kicks in. While the long-term trend remains intact for now, this pullback is a crucial test of investor confidence. We're watching key support levels closely. A hold above the 50-day moving average would be a constructive sign, but a break below could signal a deeper correction ahead. Volume is moderate, indicating we're not seeing panic selling just yet. The Dow Jones Industrial Average is painting a similar picture. The blue chip index is also down today, consolidating near its recent highs. This movement reflects a degree of indecision among investors who are weighing strong corporate earnings against macroeconomic concerns. The key story here is whether the Dow can find enough buying support to hold these elevated levels. A failure to do so could lead to a retest of lower support zones. For now, it's a wait-and-see approach for the industrial giants. The tech-heavy Nasdaq is leading the charge lower today, which is typical in a risk-off environment. Growth stocks, which are sensitive to shifts in sentiment and economic outlook, are facing significant selling pressure. The index is pulling back sharply after a very strong rally, and key indicators like the RSI are starting to roll over. We are now watching to see if the Nasdaq can hold support at its 20-day moving average. A break here could accelerate the downturn for the tech sector. Now, let's turn to the VIX, the market's fear gauge. As you can see, it's a sea of red for the indices, but a green day for the VIX. This spike, coming off a low base, indicates a significant increase in expected market volatility over the next 30 days. Investors are buying protection and hedging their portfolios, which is a classic sign of growing anxiety. While the absolute level of the VIX is not yet at panic levels, its sharp upward trajectory is a warning sign that the market's recent calm may be coming to an end.
Drilling down into Tesla's technical chart, the story becomes clearer. The stock closed down 1.5% at 330.56, and the chart is flashing several cautionary signals. We see a clear rejection from the upper Bollinger Band around the 346 mark, suggesting the recent upward move is exhausted. Simultaneously, the RSI has peaked and is now trending down from 70, indicating a loss of bullish momentum. The MACD, while still positive, shows a flattening histogram, which often precedes a bearish crossover. The immediate support level to watch is the 20-day moving average, or the middle Bollinger Band, right around 323. A break below this level could see the stock test the 300 psychological support zone. The outlook is neutral to bearish for the short term. Adding fuel to the bearish fire is a recent article from The Motley Fool, which highlights two major red flags for Tesla investors. The first is the dramatic increase in competition. Legacy automakers and new EV players are finally delivering compelling alternatives, which is starting to erode Tesla's once dominant market share. The second red flag is the resulting pressure on profit margins. To combat this competition and spur demand, Tesla has engaged in several rounds of price cuts, which directly impact its profitability and challenge the stock's premium valuation. This news is likely weighing heavily on investor sentiment today, contributing to the stock's underperformance. For the future, the market will be laser-focused on Tesla's ability to maintain its market lead and protect its margins in this increasingly crowded EV landscape. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.